this is Troy Warrick, your Realtor, and I'm here today again with Steve Wadle, a good friend, client, experienced real estate and stock investor. And if you remember, about a month ago, we did a initial blog on investing in 401ks or real estate. We hope you found that interesting. Well, today is our second blog, and the title of today's blog is 5 Keys to Evaluating and Making a Successful Investment Purchase. So we're going to go through each of these keys, and we hope you find it beneficial if you're looking to hopefully invest in real estate either now or in the future. So I'll start off with key number 1. And to me, key number 1 is assembling a good team. You need a realtor, obviously, who can identify properties that meet your needs, both in price range and good parts of town and things like that. Secondly, you need a good lender. You need a lender that is going to be able to get the job done quickly in a hot market like we're in now. If you have a lender that doesn't really know what they're doing, that can really cost you a deal and basically make the whole deal fall apart. So you need a good lender. Secondly, thirdly, you need good contractors, because inevitably, when you own an investment property, you're going to need some things to be done. So if you have a good team of handymen, plumbers, electricians, yard guys, things like that, it can be critical. Key number 2, knowing what type of property you want to buy and have a plan for finding it. Do you want to buy a single family home? Do you want a place that has an HOA that's going to take care of a lot of the exterior, the roof? Do you want a condo where it's, you're definitely going to have less maintenance than you will in a single family home? Pluses and minuses to that. You can probably get more rent for a single family home, less rent for a condo, but less maintenance cost. So figuring out the type of property that you're going to buy is very important. Along with that is the maintenance of the property. Is it going to be a fixer-upper? Is it going to be already done and ready to go? How handy are you as a person? Some people can fix about anything. Others, I kind of put myself in the middle of the scale, but yeah, others maybe not so much. So those are the first 2 keys. Now I'm going to hand it over to Steve for a third key of evaluating and making a successful purchase.
Thanks, Troy. So the third topic we have in these areas to consider is called buying it right. So once you've assembled a good team and determined the type of property you plan to buy, then you want to make sure you will buy it right. So what exactly does that mean? Well, it includes buying in a good area of town with prices trending up, right. With good rental prices that that you can get a fair rent in that particular neighborhood. Also, the property should probably be within about 45 minutes of where you live, so that if you have to get to it for maintenance purposes, check on your tenant, just see how things are going. It's something that you can accomplish easily. And there's an old adage in investing that served people quite well, and especially relevant to real estate investing, I believe, because real estate's a little bit less liquid, and you're probably going to hold on to it for a while. And the message really is that you want to make sure you pay a fair price for the property. You want to be a tough negotiator when you buy. Your realtor will help you with that. Always remembering that the extent to which you can buy at a great price, you'll make your money going in, reduce your risk, and simplify your decisions significantly when it comes time to sell the property, because you've got more equity in it and you've got a little more flexibility in the price you can take when you sell it.
Right. So
don't overpay, but don't be so narrow-minded that you walk away from good deals. Especially if the area that you're in is up and coming or has good promise, and that's something that you'll be able to work with your team to figure out. So keep all these things in mind, and my experiences will serve you very well. So now I'm going to hand it back to Troy. He's going to talk a little bit about putting the numbers to the test and making sure you've got a good financial deal.
Right. Yeah. So the fourth key in evaluating and identifying a great investment property is really putting the numbers to the test. So when I mean numbers, you evaluate each property by looking at actual factual numbers. So what is the likely rent I'm going to get? And based on that, what is my mortgage going to be based on the cost of the property? So factoring in the mortgage, the insurance, any HOAs, taxes, any kind of deferred maintenance, And there are some great tools to doing this. One, which you'll see on the screen now, it's at a website called goodmortgage.com. And here you simply plug in the numbers, the hard numbers, not made up numbers, that identify this property. And then at the end it'll tell you, based on the rent you can get, am I cash flowing, am I making any money or not? So we want to deal in reality with any type of investing, right. But certainly in looking at identifying a property, you have to look at the hard numbers and make sure that you know what the bottom line is. It is my personal recommendation, and any of my clients that I help buy investment properties, that we do not buy properties where we don't cash flow, or at least break even. I think it gets into too much risk, and is not overall a good investment to do that. So when you look at what your mortgage is going to be, all your costs, look at the rent. You want to at least have something on the I guess it'd be the black side, right?
Right, exactly.
Not the red side.
Yeah.
So that's I think great advice. And for our final point, I'm going to throw it back here to Steve.
Before I go there, I just want to say, back on Troy's point there, sometimes, some people aren't as oriented to sitting down and running those numbers, but make sure you do it. Really, it's one of those key decision points you want to get done. Okay, so being able to get a reliable tenant who has the ability and the integrity to reliably pay the rent and be respectful of the property is another really important consideration. Remember, the nicer the property and the better the location of the home or property you purchased, the more easily it can be rented and for a higher rent. This also tends to help with obtaining a more reliable tenant. However, it also means that the property might cost a bit more, and so that's the trade-off point that you want to consider. One tool that can be helpful to evaluate tenants is to confirm that they have the character, the financial capacity, and the capital, if needed, to pay the rent and be respectful of the property, and by doing so you'll increase the likelihood of getting a great tenant and make the ownership of the property a much more pleasant experience.
Yeah, and just to add that's a good, an application form where the prospective tenant fills out their income, assets, anything you want to ask them.
Right.
The more information, the better, I'd say.
Absolutely. So, now you got the property, you want to get a good tenant, and you'll be off to the races for hopefully a really great investment experience. So, Troy, gonna close it up?
Yeah, you bet. Well, thanks again for your good comments, Steve, and we hope you enjoyed this and it was helpful to you. And of course, if you have plans to invest or purchase a property here in the near future, let me know. I'd be happy to just dialogue with you and answer any questions you may have. And we'll see you on our next blog. Again, Troy Warrick, Cherry Creek Properties. Thanks.